So good morning. I thought it would be a good time to look at catalysts. We haven't looked at catalysts in a very long time. In fact, interestingly, even Gary Black hasn't put up a new catalyst list in a very long time. And I kind of wonder why that is and why I'd kind of forgotten about it. But we're really looking at a tremendous, huge stack of potential catalysts over the next 50 days. 49 days from now will be 8/8. So the 50th day, the day after that, would be a time when the stock should fall dramatically or not. We don't know what's going to happen this time because you never can tell. 8/8 is shaping up to be a pretty monumental day. And I'm not the only one that thinks that way. A lot of folks are thinking this could be a huge breakthrough day. So let's take a look, though. Let's take a look at what I've got in mind here. Number one, the numbers will be coming on July 2nd. Now, the street is expecting way too much right now, but it's starting to come down. So AJ has now come in at 421,000, as I mentioned yesterday. And Barclays had this to say. This is from The Fly. Dan Levy at Barclays expects Tesla to report Q2 deliveries at 415,000, even less than AJ. AJ, of course, has a really good record recently. That would be down 11% compared to last year's estimate of, but that would be 11% below the consensus estimate right this minute at 444. However, the firm believes its estimate is somewhat in line with more muted buy-side expectations and suspects that final Tesla compiled consensus estimates will end up lower. So yeah, that's what I'm saying. So between now and the second, we'll see a softening of the estimates out there. A soft delivery result could turn investor attention back to the currently challenging fundamental environment for Tesla, as the company is likely to face continued negative revisions on 2024 and 2025 estimates. I think that they might, but I think that's where they'll be wrong because energy and other things, including average margins, et cetera, are going to prop up the earnings. So earnings could be surprisingly as good or better than expected as the year unfolds. So AJ right now, as I mentioned, is at 421. We might see some pressure on the stock. Let's go on to the second potential catalyst is a beat or any commentary around the numbers on the second. So could there be some surprises in those numbers recently? We haven't seen too much surprise except last time on the downside. Maybe this time we'll see an upside surprise. And there could be commentary. So there could be usually there's a note that goes out with these numbers. There could be surprises in the commentary. So that would be the first day that we might see something. All right, in the month of July, we are very likely to see Baidu or Tesla or another company in China begin testing the cabs, testing robocabs, cybercabs, robotaxis, whatever they're going to be called. They might be called something entirely different in China because those guys have a different word for everything. Anyway, I believe we'll have that test at the airport, or we'll have another test in that other city that I can't remember the name of. And there may be other tests that will be coming out of China. XPeng is here in the US. It was testing FSD. Maybe XPeng will do a test. Who knows? But I think we'll start to see some testing in China during the month of July, and that could be a catalyst. Also in July, China will agree to let Tesla start selling the FSD product in China. So we've been very close to that all along. I think that'll happen during the month of July as they will get the final okay. Now, it might be August, it might be September, but I'm just saying, I think there's a pretty good chance given the way things have been going and given that I'm guessing that Elon will be putting some pressure on them, soft pressure, persuasion, to get it done. All right. On July 17th or 24th, we will have the second quarter earnings, along with any commentary at the press conference afterwards. We will probably see a beat on earnings because between now and then, people will be knocking the earnings down because of the numbers. And then I think there'll be surprises in a number of areas that will cause the earnings to be a beat. That doesn't mean that we'll see a tremendous reaction to the stock positively necessarily over that meeting, But let's just say we have the potential to be inching upward all this time as opposed to downward. There'll be ups and downs, but going in the right direction, maybe breaking through 200 around this time. Then, of course, July, we have FSD reaching the level where all YouTube reviews are 100% without intervention. It'll be an oddity. Every once in a while, there might be someone with 1 or 2 interventions. We talked about this last night with Bradford Ferguson, feeling like this will be the kind of thing that will start to beat the moment, the moment when people go, oh, it's a done deal. Well, then I think there'll be an announcement when that happens, when we're starting to see almost 0 interventions. And also when all of the different, reverse and K-turns and, the few things that are left, about 10 things that are left, that all of those will be in the car, ready to go. They will be operating in the cars during the month of July. So that will be feature complete, and Elon will announce it as feature complete. Then on August 8th, of course, we have the big day. That will be the introduction of the CyberCab prototype. I'm pretty sure that we will see a physical product. There will be a plan explained for some type of rollout. That's my expectation. Possibly there will be immediately some kind of one city in the US or one city in China, maybe more and maybe more generally, but I think there will be some immediate or very close to immediate rollout. Then a longer term expectation for a wide US release by the end of the year, January, I'm not sure, but there will be a lot of the plan, and the showing of the app will be at that time as well. So they might also have the showcasing of the $25,000 vehicle at that time, and that may or may not be a version of the CyberCab. It's more likely to be maybe a version of the Model 3. I'm not sure, but we might get to see that. That's a maybe. That might be later in the year or even the beginning of the following year. Then in August, we will have some kind of licensing agreements being announced for China, maybe also for the US for FSD, because by that time it'll be obvious that Tesla has won the deal, they've won the day, and people will have to start lining up for that licensing because they're going to want to start putting the camera suites into the cars, etc., and start getting their plan in place to be able to roll it out within a year or so with Tesla's FSD. All right, this is from Seeking Alpha this morning. Analyst Dan Ives said that with Elon Musk's compensation package finished, the next step is for Tesla board to get Musk to an incentive-driven 25% ownership. That should resolve the AI threat saga over the last few months and keep the crucial AI initiatives under the company's hood. Looking ahead, Ives and his team believe that the August 8th Robotaxi Day will be a key historical moment for the Tesla story and act as a near-term catalyst for the stock. Ives thinks the ultimate key to reaching $1 trillion and higher valuation is the autonomous and FSD vision taking hold for Tesla. It was highlighted that vision appears to be turning a corner with the latest FSD 12.4 and China FSD testing underway. In a nutshell, they said, we see positive catalysts ahead for Tesla and a compelling risk-reward stock with August 8th Robotaxi Day and second half rebound potentially in the cards after a choppy first half demand performance. Remember now, the Tesla FSD complete, that Tesla being a full-on, as Bradford said yesterday, being a full-on experience where it's no question that when people ride the FSD, they're going, oh yeah, this is like having a chauffeur. I don't have to think about it anymore. That is going to cause car sales to go up. So the second half could be way stronger for auto sales than anybody is expecting. Wedbush Securities has an outperform rating on Tesla and a bull price right now of $350. The view of the stock is that it is more of an AI and robotics play for investors. In a nutshell, we see positive catalysts ahead for Tesla, compelling risk. I just said that. Why did I say it again? All right, this is Randy Kirk. Hit the like button, hit subscribe, hit notify. Today, of course, we will have, who do we have today? I think there's a really good chance that we'll have a video with Warren Redlich, who is now, believe it or not, he is on Elon's list, and every day almost Elon is responding to things that Warren is saying. That's not why I'm having him on, by the way. It's just it was time. He and I had already planned this a couple of weeks ago, and we could never get together. but I've got some very interesting things, especially on the legal side, that I want to talk to Warren about. So that might be what you get later today. And then Larry Goldberg will be back with us tonight for Good News Friday. And hopefully we've got a nice pop in the stock today to talk about. All right, this is from Forex Live today. U.S. June S&P Global Flash Services PMI 55.1. Holy mackerel, versus 53.7 last month. Was that the expectation or last month? No, was the expectation. So people were expecting only 53.7, came in 55.1. This is a 26-month high. The prior high was 54.8. Manufacturing also came in higher than expected, 51.7 versus 51 expected. And last month was 51.3. The composite, 54.6 versus 54.5. So the composite came in pretty close to expectations. Selling prices is at one of the lowest levels of the past 4 years. We should have kind of expected that. And at a 5-month low. Improved business confidence for the year ahead, notably in services, though, as well as renewed pressure on operating capacity from rising demand. Okay. Services future prospects hit a 5-month high. Service sector payrolls rose to the greatest extent for 5 months, helping reverse some of the declines seen in the sector over the prior 2 months. Okay, it says the services number is above the highest economics estimates and points to an economy that's strong and resilient. However, the pricing numbers are also moving in the right direction. That could limit the hawkish reaction. So a Goldilocks report, well, it's the first one we've had in a while, but that's why I've kept my number at 35% chance of recession in the third quarter, is because we keep getting these conflicting amounts of numbers. It's just crazy. Meanwhile, at the conference board's leading economic index, the LEI for the U.S., decreased by 5% in May. Now, remember, this is a May number, not a June number. So this is May, but decreased by 0.5% rather, to 101.2. 2016 was at 100. That's following a 0.6% decline in April. Over the 6-month period between November 23 and May 2024, the LEI fell by 2 full percent. Now, that's a smaller decrease than its 3.4% contraction over the previous 6 months. The U.S. leading economics indicator fell again in May, driven primarily by a decline in new orders, weak consumer sentiment about future business conditions, and lower building permits. According to Justiana Zabinska-Lamonica, senior manager, business cycle indicators at the conference board. While the index's 6-month growth rate remained firmly negative, the LEI does not currently signal a recession. Let me read that again. The leading economic indicators right now, even though they are going down, it does not currently signal a recession. We project real GDP growth will slow further to under 1%. What have I been saying? Annualized over the Q2 and Q3 2024 as inflation and high interest rates continue to weigh on consumer spending. So under 1%. So easily in the third quarter could fall under that zero level just by being off a little bit. The Conference Board Coincidental Economic Index, the CEI for the U.S., rose by 0.4% in May to 112.4 after increasing by 0.1% in April. The CEI, the Coincidental Economic Index, grew 0.6% over the last 6-month period. The CEI's component indicators, the payroll employment, personal income less transfer payments, manufacturing and trade sales, and industrial production are included among the data used to determine whether we're heading for a recession. And all 4 components of this index improved last month, with industrial production making the largest positive contribution. Industrial production. The Conference Board lagging economic indicator for the U.S. inched down by 0.1% in May after increasing by 0.3% in April. As a result, the lag's 6-month growth rate softened to 0.7% between November and May, down from 0.8% over the previous 6 months. All right, so there you go. There you go. You have the leading economic indicators. After you heard, the S&P flash saying, "Hey, everything's great." Now you got the leading economic indicators saying, "Well, we're not going into recession, but it ain't great." All right, this is now. I just want to keep confusing everything here. This is from CNBC on the home sales. Sales of previously owned homes are sitting at a 30-year low. 30-year low, and didn't move much in May as prices hit a new record and mortgage rates remained high. So you've got housing in a complete recession, continuing recession, not a chance it's going to come out of recessionary levels, and unit sales at a 30-year low on new homes. I'm sorry, these are previously owned homes, 30-year low. We know that permits and building starts were both extremely low yesterday or the day before, under the 1 million level. So-called existing home sales in May were essentially flat, down 0.7% from April to a seasonally adjusted annualized rate of 4.11 million units, according to the National Association of Realtors. Sales fell 2.8 from May of last year. 2.8 from May of last year. The count of closed sales is based on contracts likely signed in March and April. The sluggish sales came as sales rates took a big leap in April. All right, so as I've mentioned over and over again, I'm sorry to do it again, but there's people that don't watch every day or have never been on before. We had massive sales of homes over the winter months, the October to March months, way bigger than expected. And so you get a lot of people buying that were not expecting to buy, or that were buying ahead of when they planned to because they thought they could get ahead of price increases in the new year or whatever reasons. And also there was some interest rates that dropped below 7% for a minute. And so now you get into the spring when you would normally, between March and October, you would normally have your big sales, but interest rates went up and a lot of people that wanted to buy or needed to buy already did. So I think this is what you're seeing right now. Home sales refuse to recover, says Lawrence Yun, chief economist for NAR. I thought we would see a recovery this spring. We are not seeing it. Sales are unchanged month to month in all regions except the South, where they fell 1.6. The biggest change in May is that inventory of homes for sales jumped up 6.7 month to month and 18% higher than May of last year. At the current sales pace, there's a 3.7 month supply, while inventory is gaining is very low given demographics and demand. Yeah, so this is this is historically low inventory levels, and it's historically low in terms of how long it takes to sell a home, but it is historically low. But the last 2 years has been even worse. So this is like a bump up in inventory and a bump up in how long it takes to sell a house, but it's still crazy low. Eventually, more inventory will help boost home sales and home price gains in the upcoming months. Increasing housing supply spells good news for consumers who want to see more properties before making purchase decisions. Well, but the demand continues to push prices higher. The median price of an existing home sold in May was $419, a record price, ending up 5.8% above last year. The gain was the strongest since October of 2022, and prices gained in all regions. The realtors noted in the release that the mortgage payment for a typical home today is more than double what it was 5 years ago. Not only have rates climbed, but home prices are more than 50% higher than they were 5 years ago, coming part because the median is skewing to the higher end. Sales of homes priced below 250 were lower. Sales of homes priced below 250 were lower than a year ago, while those priced between 250 and 500 were up. Sales priced between 750 and $1 million were 13% higher, and sales priced over $1 million were up nearly 23%. This is the important paragraph. Sales of homes priced below 250 were lower, okay, because there are none. There are no homes under 250,000. And where's the sales happening? People are moving up. They bought their $250,000 house 5 years ago. That house is now $375,000. They're using that increase in their equity to buy a house that's worth $500,000, or their house of $500,000 is now worth $750,000, and they're using that equity to buy a house that's worth $1 million. That's what's happening. Cash is still king, accounting for 28% of all sales. That continues to be huge. First-time buyers are hanging in 31% of sales. That's pretty significant, up from 28% a year before. That is a significant number also. 2/3 of homes went under contract in less than a month, so competition is extremely strong despite higher prices. Redfin, a real estate brokerage, is reporting that an increasing number of listings are becoming stale. So the home that comes on the market that is well priced and doesn't need much work, it goes fast. But if you put the price too high, or if the property is garbage, it stays on longer. So there's again, you get into the details, you start seeing what's really going on here. You got people that are saying, I'm going to take advantage of the opportunity. They put the price way up here, which is really stupid. In any market, you should always put it close to market price and let people have a bidding war. And then people are putting houses on the market where they haven't dialed them up a little bit, taking care of some of the minor stuff. By the way, if you'd like to make sure that you get a mortgage lender that can do this 100% right, remember, this is my client. He's not paying for this ad. He is my client, but he's been my client for 16 years. He's one of the top mortgage brokers in the country in terms of sales. And he's also a personal friend for over 20 years. Bill Rayman, his name is down below in the information. All right. Where are the markets now? The markets are right now. Tesla was bouncing around earlier. What has happened since? It is now down 2 entire cents. It has been up $1.50. It's been down. Right now it is, I guess you would call that unch. You have the Dow Jones up 103 again. We've got the Dow again being up while the NASDAQ is down 63, S&P down 11. Magnificent Seven mixed with Meta down $4.85 and NVIDIA down $5.38. Remember, that would be $53 just a couple of weeks ago, or a week ago, before it had the 10-for-1 split. Okay, and Tesla is now back in the green at 18 cents above. You've got the Cathie Woods also mixed primarily in the green. All right, so let's go ahead. Oh, I'm sorry, I almost forgot to give you those numbers in percentages. You've got the Dow up 0.27, NASDAQ down 0.31, and S&P down 0.18. Tesla now up 0.13%. Okay, now let's go ahead and look at the bonds. And we have got the bonds this morning up 0.9% on the 10-year. Let's go ahead and open this up. And we got, yeah, so, and, but the 2-year is only up, it was up it's up 1 basis point. And you've got the 2-month up 0.2 basis point. The inversion between those 4.263 and 4.741. So you're just under 50 basis points on that 2-year and 4.263, and you are 5.3. You're still way over 100 basis points on the 2-month split. All right, so just to keep that in mind, we got to keep watching that. We're all going to learn from that. If we just keep watching it, we are going to learn something at some point, or not. Who knows? Okay, oil up another 16 cents this morning on Texas. We're on Brent is up 19 cents, about the same, 0.2%. 81.45 and 85.88, moving up towards 90. We'll see what happens. Natural gas down a tad this morning. 0.07% down at 2.739. Oops, just went to unchanged. You've got gold is down 23 after being up strongly yesterday. 2,346. Silver down 3.3. Back down under 30. Okay, that's interesting. And copper down 2.46. Wow. Big sell-off on commodities today, at least on these commodities. That's interesting. The dollar is firm this morning. The Bitcoin down 771 at 64,175, flirting with its recent lows. All over the place this morning. Okay, well, I've gone through everything that we talk about here. So a couple of things you want to do is I'll give you the final Tesla number before we say goodbye in a second here. So you want to hit the like, subscribe, and notify buttons. I just talked about who will be around. Lots of good stuff yesterday. The Cern Basher video was fantastic yesterday. If you didn't see that, I'll put this card up for the Cern Basher video. Later on today, probably Warren Redlich. He and I should be talking here in about half an hour, and we'll have that up about 11 o'clock. And then Larry Goldberg on tonight. Now, if you haven't joined Patreon yet, this would be the day. It's Friday. It's a good day. Tesla is up this morning, now 28 cents. Join Patreon, jump on down, hit the link, and go over there and take care of business. All right. It has been great talking to you.